Thank you for tuning in to the third quarter 2023 market update with Brent McCay and Hayden Proffitt. So Brent, what is going on in the market right now?
So as we go to the third quarter, obviously the first two quarters were positive for investors, which was nice, and the third quarter's been negative for investors. The big issue ringing in the market right now is corporate earnings have been very strong. Companies actually make the same amount of money today as they did in 2021, so we had a little bit of a decline in 2022, but the companies are actually making the same amount of money or more money this year they're on pace to earn. That's been very positive. That is being overshadowed though by the Federal Reserve. The Federal Reserve has indicated that yes, they're not raising the short-term rates much anymore, but they are likely to leave the short-term rates longer for high or higher for longer. They're going to leave those rates higher, and that's causing many investors to get concerned that the Federal Reserve could very likely keep the rates too high and potentially cause a recession. And so that fear is back on the table. Then if you look at the bond market, this year the stock market or the S&P 500 has a positive return. It's still up, as of us filming this video, about 10%. But the bond market is now going negative again. When you start looking at interest rates rising on the 30-year Treasury almost to 5% and mortgage rates at 8 to 8.5%, that's got a lot of people saying, well, hey, I don't want to have a bond at 7% when I can get one at 8.5%. And so as we look at that, that's having a pretty negative impact on bonds and on small U.S. companies. A lot of small U.S. companies rely on financing in order to exist, to come up with startups, cures for cancers, new treatments for diseases, or just new theories on how to make money. And so a lot of those companies cannot be funded when rates are higher because people will say, well, hey, why should I take my hard-earned investment money and invest in something that's high risk when I can get up to 5% on a guaranteed basis, like in a CD or something like that. And so that's kind of what's defined with the third quarter is that. It's also having an impact on the international market. A lot of money has moved out of emerging markets and European markets back to the United States because, hey, if you can get 7-8% in America, that looks a lot better than loaning somebody money in Honduras. So that means people in Honduras might be paying 40 or 50% interest on loans, which is also encouraging a lot of them to immigrate to the United States because when you can't borrow money, it's very hard in order to grow your economy or your business market. And that's been the big impact on the third quarter. I would expect the fourth quarter tends to be a better quarter for investors. The third quarter tends to be the toughest quarter of the year. This quarter lived up to that expectation, unfortunately, again. But as we go into next year, it's going to be very easy for the Federal Reserve to say, hey, let's cut interest rates. Let's reduce these rates because all they got to do to cause the stock market and the economy to boom is they cut rates. And we know next year's an election year, and every politician's goal is to get reelected. And so it's probably pretty likely that we'll see some change in policy next year. But right now we are kind of in this, as we do in this video, we're in a kind of a little bit of a extreme negative sentiment where people are very nervous. But that's very common for September and early October for markets.
Perfect. Well, thank you so much for just going over that. And next time you'll have to join us for fourth quarter 2023, our next market update. Thank you again.